Hey, good evening, guys. 5:30 p.m. on Saturday, January 20th, 2024. Hope everybody's had a great new year so far. I know I haven't made a video. I think this is my first one this year. I had some couple of trips, holiday. I was gone the first through the first 7 or 10 days of the month, and then I was home for a week, and then I was back out again. Now I'm just home again. So I just honestly haven't traded a heck of a lot, but more importantly, I haven't been able to take the time to record a video. So anyways, we're just going to go through some things. Now, I know I mentioned, as you can tell by again, my channel name changed to Futures Brizio, so I mentioned I'm not trading Forex anymore. So I do still trade Forex on my funded account. This is my funded account, but I don't trade on my personal account anymore. I do only trade futures here. This is my futures account right here, personal account, and this is my my FX funded account. This funded account also does trade NASDAQ index. This is the NASDAQ index, which is going to mirror the futures market. This is the S&P index, which again will almost exactly mirror the futures market. So I can trade it on this platform as well, which I do. So if I take a trade on NASDAQ or S&P on my futures account, I will take it on this account too, because the price action is going to be identical 99.9% of the time. So. But anyways, just getting to the Forex stuff. You can see I've got 1, 2, 3, 4, 5, 6, 7 Forex pairs that I'm currently using, and I may even cut this down more because again, I don't trade this exclusively, so there's not a lot of reason for me to bother looking at a lot of different Forex pairs because it's not all I do. And again, I think it's important to do more than one Forex pair if you're going to trade Forex or any asset really, because unless you have a great strategy for consolidating sideways markets and you like trading that as well as trends, then you really have to have more than one asset, because at any one time you're going to have assets that are consolidating sideways, and there's no opportunity if you're a trend trader, and depending what time frame you look at or whatever. So that's why I like to be diverse and, see different asset classes. And it's not that I want to analyze multiple different pairs and assets, but it's just because, again, depending on what's going on at the moment in any given one, there may or may not be an opportunity. And if I don't trade sideways markets, I try to avoid them like the plague while they're consolidating. And sometimes you don't know that until they've been consolidating for a while, and then, at that point I'll just step away and, I'll just look at it once a day just to see what it's doing. But until it breaks out and starts trending again, I just leave it alone. So anyways, that's why I look at multiple currency pairs, although I try to stick to mainly US-based ones, although I do have the pound Aussie up here. Because right now it's trending nice, and it does tend to trend pretty well when it does trend. So, and then for futures, again, I only have the NASDAQ, S&P, natural gas, oil, and I do still currently have soybeans pulled up here. Although I don't trade this really actively, but it is one I'm looking at because it's been trending pretty nice lately. So, but anyways, back to this. So let's just talk briefly, and this is basically using price action only. The only indicator I have here is a 50-period smooth moving average. Okay, so I know a lot of people don't use smooth, but I prefer smooth over exponential or simple or linear weighted. And there, there's advantages to everything. Obviously, moving averages are all lagging anyways. But what I like about the smooth moving average is because it does hug the trend pretty well. You have to find the right setting. This happens to be a 50. On some assets, you have to change it. 50 might not be good, might be too long, too short. The disadvantage that a smooth has is because it has a different calculation. It can be a little slow in reacting to changes in trend versus the same period in, say, an exponential, but it does smooth it out. And if you find the right one for the particular chart you're trading, asset and time frame, they can be really, it can be a really helpful one because it does smooth out a lot of the noise. So this happens to be the GBP Aussie. Now, because of where I live, I don't trade the London session, so I don't tend to trade a lot of euro pairs or even pound pairs. But I do like the pound Aussie because although a lot of these moves are going to happen during London when I'm not in front of the charts, you will get a decent amount of them, of these entries, in a trend that will happen during the Asian session. And I know a lot of people don't trade the Asian session, and I don't much, believe me. But because that's nighttime in my time zone, for the first 5 to 6 hours of the Asian session, I'm awake. And so I will take a look, at least once during the Asian session before I go to bed and see if there's any setups. And if there's not, fine. If there is, then I'll take it. And I will hold it into the London session as long as, I feel like it's got some room to breathe. So I will do that. And the pound Aussie is one of those that I like. Pound yen is also another one, and maybe Aussie dollar. Obviously, the Aussie dollar is going to be heavily influenced by what the dollar is doing. But there could be some, if there's synergy between the two currencies, there could be some movement during the Asian session as well. So, but I don't go crazy and have, a whole bunch of Asian pairs up here. It's just not worth it. It'll just lead to over trading. So anyways, so I'm just looking at price action here. So this is the hourly chart, and I like to use the hourly and the 4-hour chart and entry on the 15 when I'm using these price action setups, and I'll use the 50 period as kind of a guide. So you can see on the hourly chart, we had this nice trend. You can see how well the moving average holds this trend. And just recently, we had this pretty impulsive breakdown below. And you can see normally this holds it really well. So when I see this impulsive move and I see this type of thing where it breaks the 50 smooth, and now, we've come back up. And look, this could just continue and go up and make a new high. I know I have this arrow and this line here, but I'm going to be keeping an eye on this. Now, this is still in an overall uptrend. On the 4-hour, you can see we have a breakout to the upside. So you probably could consider this a counter trend trade. But if we get a little pullback and then a push lower, and, we manage to hold this impulsive move down inside this range, then I will be looking for, as you can see, shorts, at least back to this area. If not down to here, this would be my couple of initial targets. And this one is basically because this was resistance now acting as support, and then this one is the last major kind of swing point on the 4-hour chart. So that's kind of where I came up with those two levels. And so, if it does that, let's say, the market opens and we kind of trace back up, and even if all we do is get back down into here, that's potentially 170 to 190 pips. And if we happen to continue down, this is, 270, 300. So this is 2 or 3 days in this pair. This pair does move quite a bit. So this would take, if it did that, it would take probably 2 to 3 days to make its way down here. So even though it's an entry on a 15-minute time frame, it's still probably a swing trade. So if we go to the 15, you can see obviously we're trading below here. We've had some impulsive action. And so again, if this downtrend is going to continue, I expect that we'll see potentially a little bit more of a rally back up, and then potentially look for a short. And again, this is counter trend off the 4-hour, so I'm not going to have super high expectations for this, but it is an opportunity potentially. Okay, pound yen. So you can see I currently have a long position on here, which I'm not really happy that I took, because I do think the pound yen's probably going to do the same thing, and we're going to see further downside. You can see we came down here into this little zone on the hourly chart. We bounced. I took a long, and you can see I have this arrow drawn. I do have a take profit back up at the highs and my stop loss right below. Depending what happens when the market reopens tomorrow, I probably will close this. Who knows? It could gap down and stop me out at the open. I don't know. But we'll see. But I do think much similar to the pound versus the Aussie that this will come down. Now, the difference is on this one, on the 1 hour chart, we don't have a violation of the 50 smooth. All right, we're still trading above it. So, if this thing gaps up and continues up, then I'll hold the trade, at least to my take profit, which isn't very far away anyways. But, with this impulsive price action here, I would not be surprised if we see this thing push down. Again, these are basically the same two type of levels I have on the pound Aussie. So that's what's going on with pound yen. Dollar Swiss. So dollar Swiss, you can see prices now coming back into this support level. If we break it, then I could potentially see a short down into this zone, which again would still be counter trend. You can see on the 4 hour chart we're trading well above the 50, which is now turning back up. So this would be counter trend, but it might be an opportunity for a quick short position on a pullback, but I'm still overall bullish just by the way this chart looks. The Aussie dollar, you can see I'm not really interested in this. We're sitting kind of at a critical spot right now. Here's the 1 hour chart. You can see price just trading on either side of the 50. And so I have these two boxes here. Essentially, if we can get a close above here, then I think this will, I'll start to shift my bias maybe a little bit more to the upside. You can see on the 4 hour we're still, well in a downtrend. But we did come into this zone down here and reacted off of it. So we'll see, what happens here. If we get some bearish price action back down, then this downtrend may very well continue. But this isn't one I'm really, I'm going to keep an eye on it, but it's not one I'm looking for any immediate opportunity in. Dollar yen, not really interested in right now. You can see, again, we're definitely in an uptrend on the 4 hour. And you can see on the 1 hour, we're now starting to consolidate. I wouldn't say this is definitely a consolidation we're entering in now, but you can see we've already had one, we had this high, then a swing down, then a high, swing down. And for the most part, we're staying inside this a range right here. Now, I don't know if this is going to hold or if it's going to break out to one side, but this is starting to look like a range. So we'll see what this does. I have the kind of the first line in the sand right here. Now, if we break down and get below the 50 here on the 1 hour, then I might potentially look for a short-term short positions. But, again, it's counter trend. So dollar yen, not too interested in, just watching it. Dollar Canadian, on the other hand, I'm looking for at least short-term short positions here. Back down, you can see about where I have this drawn 1 hour chart. We've now violated the 50, and we had a pretty impulsive move. I didn't take any of these. Again, I just got home, so I really didn't trade much the last basically 3 days. So, and of course, this is an hourly chart. There was an opportunity to enter right here. But I basically on this pair, I'd like to see maybe a little pullback and then potentially back down into these levels as at least a short-term target, which would still be, still be about 100 pips if it gets down there. So that's what I'm looking for, at least in the short term on dollar Canadian. And then lastly, CAD yen. I'm not interested in CAD yen. It's not doing. There's nowhere. It's not set up to do anything right now. You can see we've had a big run up, so there is no opportunity here right now either for a continuation or a short-term reversal. So I'll wait on CAD yen to come back down to earth and then just see what I might be able to do after that. And this is one of those where I might have to change the length of this moving average to more like this is I just changed it to 100 period. You have to kind of mess around with these. So, and then if we flip over to futures, so again I mentioned this is soybeans. You can see soybeans. We made 2 attempts at these lows right here. We came down here, bounced, came down, bounced, came up, bounced again, back down. So 3 attempts into this zone here. So this potentially could be a bullish sign because price is having a hard time getting through these levels. And every time it tries and it bounces off these levels, it basically, to me, it weakens this area, weakens it in terms of being able to push through it, because obviously the buyers are, feeling a little bit more emboldened, because every time it gets down here, it fails to get through. And so that's why I kind of have these two boxes. Essentially we're in this range now, but if we bounce and can come up and take out this swing, then my bias will probably shift more northward in soybeans. But for now, not really an opportunity, because now we're just right smack in the middle of this range. So I'm just going to watch and see what this one does. Oil, there's a lot of uncertainty with oil, mainly because of everything going on in the Middle East right now. You can see oil has essentially been inside of a range now since really early December. We started entering into this range. It's kind of trading between this, $68 and $72 range. And so, I'm not interested in oil. This is really just choppy. This is a 4-hour chart, and look how choppy it is. So until oil kind of figures out what it wants to do, I'm not interested in the oil market. Natural gas had a really nice run up. You can see it on the 4-hour, but now we've broken back down again. Now there's fundamentals involved with this too, because again, gas could be influenced by what's going on geopolitically, but at the same time, gas, in terms of gas futures, the producers, the end users, the buyers and producers for this, for most part, by the time you get into January, even though this is the coldest time of year, they've pretty much bought their supplies at the price they wanted to for the season. So again, even though we're in the dead of winter right now in the northern hemisphere, for the most part, the supplies are where they are, and there's a lot of hedging going on. So unless there's some sort of major supply disruption transfer, then we may see gas continue to kind of trend down a bit. So there's no opportunity right now. If this downtrend is going to continue, I'd have to see a pullback here, and then potentially an opportunity to re-enter. So, but my bias on gas, at least for now, is to the downside. And if this continues, then certainly I'd be looking for a retrace back down. And then, like I said, for NASDAQ, this is S&P, this is NASDAQ. You can see we've rocketed it up here. These markets just continue to be very resilient. So there's no opportunity in either one right now in terms of trend entry. You certainly would have to wait to see these kind of come back down and pull back before there'd be any entry. So for trend traders, entries, again, NASDAQ and S&P, no opportunity at the moment. So in the futures, I'm just looking right now in the very short term for potential shorts in gas, and keep an eye on the rest of them. Keep an eye on soybeans, keep an eye on oil, and then just let NASDAQ and S&P kind of pull back a little bit. So. But these are just, price action trades, just using a moving average. You could, again, add a MACD to this for these pullbacks, to time these pullbacks. If I put a MACD up on here, I'd probably see an entry right here on this pullback. The MACD probably would give you that entry. And you certainly could do that. If you didn't want to just rely on the price action, you could use some kind of oscillator to time like these pullback entries, but you're using the 50-period moving average just kind of as your guide. So, and do I have? Yeah, this is a 50. So I think I put a different one on these. I'm using the 150 on the ES and the NASDAQ, and on soybeans I'm using the 50. Oil, I think this is and the 150 on oil. So like I said, you have to kind of play around with the length of these things, but they're all smooth moving averages. So, but anyways, guys, so that's what I'm looking for going into next week. Hopefully, I'll be a little bit more active in terms of opportunities now that I've kind of settled back and won't be traveling again. Hopefully for another month or two anyway. So. All right, so guys, I hope you enjoyed it. Let's catch back up again during the week and see where we're at with some of these, and how things play out. So Any questions, comments, please leave them down below. Smash that like button, really appreciate it, and subscribe to the channel if you're just finding it for the first time. Again, this is Futures Brizio, and I will talk to everybody soon. Have a good rest of your weekend. Thanks.